Hey, it's Mark from Caliber Home Loans, and it's another episode of Mortgage Tips from the Trenches. Today I just want to do a quick overview of down payment options. I know there's a lot of media hype that says everybody should or has to have 20% down to purchase a home, so I just want to go through some of the program options to show you what really is required. So first we're going to start with the zero down programs. There's two true zero down programs, and that's the first one is a rural development program. And so the rural development is a federal mortgage-backed program, and it's designed for more rural areas or those areas outside of the main cities. And so it is location specific, and there are also income caps based on where the house or condo is and how many people are in the family. But it's a great option. It is zero down, and the mortgage insurance is very low for that type of mortgage. The second true zero down program is a VA loan. For those that are actively serving or have served or qualify for a VA loan, this is an excellent option. It's zero down. It has no mortgage insurance. And late last year, they actually took the cap off as far as how much you can buy and have zero down. It is going to be somewhat limited by lender to lender as far as how high they'll go and still have zero down, but it is, I think our cap is $1.5 million at zero down and no mortgage insurance, so that's a great option. 1% down. So this is based on Michigan's down payment assistance program. So it's called a MSHDA loan, and it's 1% because MSHDA requires that you have to have at least 1% of the purchase price into the transaction. So typically, depending on the price of the house and the amount of taxes and insurance and closing costs, it will probably be more than the 1%, but it does require a minimum of 1% of the purchase price. So 3% down, so this is where there's a lot of confusion, is conventional loans. Fannie Mae and Freddie Mac, which are conventional loans, typically require as little as 3% down based on certain qualifications. But this is a great way to go, especially for a first-time home buyer. There's some specific programs called Home Possible and Home Ready that go to 3% down, and you actually get a little bit of a break on the rate and on the mortgage insurance. So it's a great way to go. 3.5% down. This is an FHA loan. So FHA has always required a minimum of 3.5% down. And again, the mortgage insurance, unlike a conventional loan, is not based on credit scores. So it's pretty low, and 3.5% down. And FHA tends to be a little bit more forgiving as far as debt to income ratios and credit scores. So it's also a great option for first-time home buyers, but also for those that just don't have a lot of money and may not qualify for a conventional loan. So don't assume that you can't afford to buy a home on your own. Reach out today to discuss your options. Again, the media likes to put out that you have to have 20% down, but that's just not the case. So give me a shout and let's talk about your specific requirements. Thanks a lot. Mark from Caliber Home Loans.